Stocks losing some steam after last week's rally. The Dow and the S&P are both slightly lower. See them both there in this final stretch. S&P, though, up nearly 19% so far this year. And now the big question as we head into year end, is there staying power for the rally or is the market overvalued? Let's bring in the Dean of Valuation, Aswath Damodaran of NYU Stern School of Business, here to discuss. Welcome back.
Thank you for having me.
So, we're resilient, if nothing else. And we've had this incredible run over the month of November. Where has that taken us to? Are we overvalued now? Are we just right? What do you see?
I mean, I think at rates at 4.4%, I think we're okay. If we're overvalued, it's not by much. I think the real test is what happens to the economy and rates going forward. I think the consensus seems to have shifted, that we're not going to go into recession, that rates are going to come down. And I think that might be setting us up for some bad surprises if that doesn't happen.
Oh, that's only because you don't believe the prognosticators.
They've been wrong so often in the last 3 years, they've become almost contraindicators. So when they tell me to cheer up, I check, make sure.
I think the most important thing you said is at 4.4%, you don't think we're overvalued. So in the instance that inflation continues to come down and rates continue to fall, we could have a little bit of expansion of the market multiple under that scenario then.
If the driver is not a much slower economy. I mean, I think that's the key. If rates come down because we somehow find a way to get into a recession anyway, which we've evaded this entire year, then I think we might be looking at trouble. But if rates come down and the economy stays where it is, I think you're right. There's more upside than downside at this point.
What sounds reasonable to you in terms of a number that you would put on the market?
I mean, I don't see rates going below 4% significantly unless there's something, there's a serious slowing down of the economy. So the way I price the market right now is that, best case scenario or towards the better case scenario is at a 4% rate. I think we're looking at perhaps a steadying at this level and rise through at least the first half of next year. But I think I'd watch the earnings and the economy numbers very closely for the next few months.
It's tricky, though, because you've had such a bifurcated market that I'm curious as to, how a professor of valuation is able to distinguish between the two without judging one as a whole. It's hard to say the overall market is overvalued based on the performance of 7 stocks, which is essentially what you've gotten versus everything else, when you would easily make the argument that, well, that may look cheap.
Yeah. And I think that's the saving grace for the market it's not as if all of the stocks are up 20%. 7 stocks have accounted for a big chunk of that rise. So to the extent that it's been a flat year for many of these other companies, I don't think necessarily small cap, but outside of those 7, there is room on the upside. And I think that's what you're looking for, is whether there'll be breadth in the market. And, these 7 stocks can't keep carrying the market, I think, for the next year. We've got to have, new players step in and take some of that heat away from these 7 stocks.
What do you think of in terms of valuation when you look at small caps, which many make the argument, despite a 10% run in the Russell over the last month, are cheap? Do you not see that?
I think the problem with small caps is that I think the economy has shifted. I mean, there was a small cap premium for much of the last century, where small cap stocks earned a premium over large cap. The economy has shifted to more winner take all. I mean, you look across sectors, you see the biggest players benefiting at the expense of smaller players. I mean, it doesn't necessarily mean that small caps are dead for the count, but I think that it makes it much more difficult for these stocks to mount the kind of rally you saw 2 or 3 decades ago, where small cap stocks had a life of their own and essentially were more high growth than mature companies.